Hi, this is Jana B. Woodhouse from Wealth Nation, giving a few financial tips. Now, I decided to talk about the tax law because everybody's talking about how this tax law is affecting them. Well, first and foremost, let me put your mind at ease. When you do your tax filing this year, no changes are taking place. The changes are going to be taking place during this year for 2018. So they say in February, you're going to see a difference for a family of four. We'll see a tax difference in their checks, possibly of around in excess of $500. Not very impressive, especially here in New York because we have such high expenses. But that's just one of the things that they have put out there to say in the media, that this is the greatest tax bill. I not necessarily agree with that. So when we're talking about the changes that has taken place, for example, the state tax. State and local tax has always been deductible, so you're not paying taxes two times on the same amount of money. But of course, that's been taken away in some ways. Now, what does that mean? That means that you have a ceiling of $10,000 to be able to deduct in state and local tax and your real estate tax. So let me give this example. If you had $10,000 deducted from your paycheck for state and local tax, and then you had real estate tax in maybe $6,000, together you are only going to be able to deduct the $10,000, whereas in the past tax laws, we were able to deduct whatever the amount would be. So you would get the credit for the full $16,000. Now, our standard deduction, that means without itemizing. So that's another division of taxation. If you just wanted to not itemize, I'm not going to take contributions, I'm not taking medical expenses, I don't have property, I don't care. I just give me a straight tax return. That has increased. Originally, we would have, like this year, a deduction of $6,350. Next year, we get a flat $12,000. But we also don't get to deduct if we have children for those deductions. But we do get the basic standard deduction of $12,000. So what does that mean? If you had an income of $24,000, you, instead of paying taxes fully on $24,000, you're going to pay taxes on $12,000 because it's a deduction automatically of $12,000 without even proving anything to the government. While I'm on this topic of deductions, there's a few other credits that are out here that are beneficial. So one of them happens to be, there's going to be a credit. Now this is going for 2018, not for 2017. So don't go to your tax preparers and say, I want to deduct this. Is that you are eligible to deduct for non-children dependents, like your parents, for their care. So that's a great deduction. There's also going to be some things that have been taken away. One of the things is you don't have to have medical insurance, but in reality, you need medical insurance. So I don't see how this is really a benefit, but now it's not mandatory, nor will you have the penalty. But this year you needed to have, for 2017 filing, you needed to have medical insurance. One of the good things about this tax bill is that for the 529 plans, this was the saving for children's education. Well, that's a good thing because now you can use that money instead of waiting for the child to reach college, and then if they don't use it, you lose it, or you have to pay taxes and penalties to take that money back. You don't have to do that anymore. You can use it for a child who is in private school, in parochial school, a charter school, anything that you're paying expenses for. You can pay at the elementary school level, use that money. So that's a positive. The other aspects is that mostly everybody planning for their estate, and hopefully all of us want to build a large estate because we're part of Wealth Nation. Right now, probably most of us won't have to pay an estate tax in any way, shape, or form. And that's something that was positive. Our tax brackets have been lowered. They're still the same amount, but they are lower. So you will pay less in taxes during the year. They may change it at the end because this is an administration of changes. But I just say to you is that get yourself prepared. One of the biggest things, and I'm going to take a quick second to talk about it, put in your mindset, if you have a business or you're thinking about starting a business, this is the time to do so. And I don't mean having a business that's going to create a loss just so that you can write stuff off. No, making a profit. Because if you have a business, there are so many credits that are here. But when I say business, having an S Corp or a C Corp, not having sole proprietorship or doing business as, that's just a regular tax income bracket. But when you're really dealing with building your business, you get so many different benefits for having your business. And later on in one of our other segments, we'll talk about being in business to make a profit and keeping most of your money and saving on taxes. So this is just a few things to address with this new tax law and my little moment of sharing financial information through Wealth Nation. Thank you.